The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you're going to have record prices in the S&P. How about 53.12 right now? On the S&P, is up by 25 points, continuing the acceleration we got yesterday on the heels of the Federal Reserve, keeping rates where they were, 5.25% to 5.5%. A lot of attention going to the fact that next year, 2025, they take one rate cut out of the potential dot plot. They changed their benchmark rate to 2.6% in the long term versus 2.5%. I was doing the show yesterday afternoon talking about, that could be the beginning of a shift. You're talking about at least 2.6%, as if they wanted to go higher, they'd probably start on a marginal basis. We'll see over the next 2, 3, 6, 9 months if that benchmark rate on a longer term basis even shifts from there. As pre-pandemic, 0% interest rates, we're not going back there, folks. That was your first clue. The benchmark rate going up to 2.6%. But what did the market like? The market liked the fact that the Fed is still sticking with the fact that they believe they'll go for 3 rate cuts this year. Now, take into consideration for one moment, they still got 3 dots on the plot for this year. But what was interesting is you got 19 members of the Federal Open Market Committee, and of those 19 members, okay, you got 9 members. So that's the largest minority you can have while maintaining a minority, right? Just under 50%, 9 out of 19, just under 50%, actually are under 3. I think you got 2 in there with 0 cuts, 2 in there with 1 cut, and then potentially 5 in there, something like that, with 2 cuts. Okay, so a little bit of disagreement. We'll see where the market goes, but boy, we're taking off to the upside this morning. We have the S&Ps, as I mentioned, up 25 points. How about the NASDAQ 100? You're up by almost a full percent, up 173 points, 18,652. The Dow on the futures, first time ever I've said it on the futures. Now, the cash, we're still quite away. Not quite, but we are not at 40,000 yet on the cash. On the futures, we are, man. Get your 40,000 hat on if you're following the futures. The Dow going to open for the first time ever with futures trading above 40,000, 40,059. Remember when we had our 30,000 hat on? Pretty remarkable. And how about the Russell with an acceleration? Russell up about 0.4% today. Bitcoin catching a bid, bouncing off the lows. Talk about volatility. Early yesterday, 1 in the morning yesterday, 61,000. You drive higher with the market to about 68,000. We're just off that price level right now. Bitcoin trading at 67,650. Crude chopping around a bit. We dipped below $81 this morning. We're trading right now at 81.25. Technically flat on the session. Boy, how about gold, folks? Gold. Now, what is interesting, gold. I think gold, the trading session closes at 130, 230, something like that. So when you see up $44, that is encapsulating the entire move that we had from yesterday afternoon, okay? Yeah, it must have been 130. I think the gold pit, maybe somebody can help me out in the den. I think it's 130 futures technically close at. So that's why it's always interesting. You see gold up $45 this morning. That is not as of 4 p.m. Eastern time. Okay, that is as of the close of futures, which I believe is 1:30 p.m. Eastern time. Nonetheless, gold 22.05. You hit 22.25 last night. A remarkable acceleration on the heels of the Federal Reserve meeting. You have dollar weakness this morning. We'll get over to that in a moment. In terms of yields, check out the volatility again this morning, right? We were all the way up to 110.26 on the 10-year, and you're talking about a little bit of a pullback. You're still technically positive by 3 ticks. You check out the yield, 4.26 about. 4.26%. Thanks, Peter. Yes, 130 those gold futures change close at. So when you see those on the futures, folks, gold up $45, that is as of 1:30 p.m. Eastern time yesterday. Still, you're talking about record prices for gold. We got gold equities, of course, trading higher on that. We jump over the dollar, as I mentioned. Quite a pullback yesterday on the dollar. Little bit of a rebound, but you're talking about almost a full point. A full point. Yesterday, when I was doing the morning program, we were at 104.13. Okay, by 10 o'clock last night, we We're at 103.17. Whew, you talk about a move, man. A little bit of a bounce back this morning, 103.61 right now. You're technically positive by 20 pennies on the dollar. We jump over the VIX. VIX, and yeah, how about it? 1273. That is a volatility suck out, man. And what is interesting, and I've been looking at this VIX, and that is a decisive break, man. Looks like the market not as worried as it had been in terms of volatility premium, paying up for volatility premium, as we just had the VIX trade from 1553 6 days ago. We're at 1273. You hit 1251. And yes, that is a decisive break of some of those higher highs and higher lows that we have been seeing for some time. All right, and we're going to kick right into it, folks. We got a call to kick off the program. We got our man Jose from beautiful Lakeland, Florida. Jose, good morning. How we doing?
Yes, top of the morning. Hey, Pops made a great call Tuesday at 4 p.m. He looked at his screen and said, yep, we're doing an ABC up, believe it or not. And sure enough, market rallied yesterday. It looks like a little bit more today.
I mean, I was listening to the show, and I heard him chuckling. You have to kind of chuckle because he said, "How do you step in front of this rally?" or something like that, right? How do you step in front of a rally like this? When I put the S&Ps, I mean, I don't know, to the same sentiment. How do you step in front of this rally until you get some sign of weakness, man? Pretty remarkable. You go back on the S&Ps to October 27th. You're at 414 in the SPY. We're trading at 520 right now. And I can barely see a pullback on that chart. And you're talking about, what we're at, November, December, January, February, 5 months. 5 months this market has been on a tear to the upside. And yeah, we get news on the Fed. They still think they got 3 cuts coming this year. The market likes that. Yeah, I mean, I really don't see weakness, right?
I have a little complaint with the Fed. Last month they said, or last meeting last month they said, they're going to go strictly on the basis of numbers that come out on, weekly basis. All of a sudden know 3 cuts coming. Whatever. There'll be quarter increments, just like Alan Greenspan, incremental L, quarter points. But look, I'm wondering if this tech sell-off. I mean, I'm driving down I-4 yesterday, and the billboard on the side of the road said 10% correction coming in tech stocks. This has to be the most advertised correction coming. Is this looking like a blow-off top in tech? That's what it seems like.
Whew, I mean, just from a probability standpoint, right? I mean, it would make sense that at some point you get some type of a pullback. I mean, I just pulled up NVIDIA shares as you were chatting there. NVIDIA has a 10% pullback some days in terms of the volatility, which is remarkable. I don't know. I mean, from a probability standpoint, of course it makes sense that you get a little bit of a pullback. I mean, I'm just jumping to the NASDAQ 100 real quick. I'm going to throw a little bit of a Fibonacci number on there. And my goodness, I mean, if you talk about anything, I mean, a 382 brings you back down 10%. And that would just be a 382 of the run that we've had from October. That would bring you back in the NASDAQ 100 to about 17,000. We're trading at almost 18,700 right now, so that'd be a 1,700-point pullback. You want to hang with us and finish this conversation, Jose?
Yes, I do. I have a real estate question, yes.
Perfect. Hang with us, folks. We're going to come back. We're talking markets. We're talking real estate. We're talking interest rates with our man Jose from Lakeland. We'll be right back, folks. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 25 points this morning as we're going to open near record, not near, at record territory. And we're talking with Jose from Lakin, and we're going to talk a little bit of real estate. So what's on your mind, Jose?
Well, my question to you is, in 08, the housing market debacle in 08, it was a buying opportunity for a lot of people like me. I bought my first house, actually a really nice one in Lakeland, for half price. But be that as it may, a realtor reminded me that the 08 debacle literally happened overnight, and can't argue with that. When Lehman Brothers failed and whatnot. I'm seeing a big shift going on. Do you think the inventory problem is real? Because I'm seeing pockets in Naples, Sarasota, Bradenton, Fort Myers, even Pinellas County, a huge inventory spike of homes coming onto the market. You went from an inventory depletion to a surplus now. If rates are going to be in a year from now 5.5%, which Tom Sr. says that's probably the case, how does this all play out? You have a huge amount of inventory coming on the market, yet mortgages are down. The rate is.
Yeah, my dad has his finger on that pulse. Maybe you can give him a call even this afternoon, because he's probably going to have a better idea than I do. But I will give you one tidbit, man. So I'm in a similar territory in terms of I wasn't quite 2008, but 2014, I bought a property in Tampa, a duplex, pretty much in the same area in terms of houses prices were still decimated at that time. I lived in one side of the duplex for an extended period of time, rented out one side. I now live in Lakeland along with you right now. And what is interesting is, I'll give you a quick tidbit. So a year ago, I rented out one side at $21.95. And that was the side I did not live in. The side that I lived in has a nice backyard. So that one comes up available now. I'm looking to rent that one out right now. And I was thinking at the time that maybe I could get a little bit more than $21.95 because it's got a nice backyard versus the other side, both very identical mirror image properties. Started a little bit higher. Bottom line is I got it at the same price at $21.95 right now, and I'm sure it'll rent. I'm going to give it a little time, but it hasn't gone just yet. And so it is interesting when you look at just the anecdotal, and it's pretty anecdotal. You know, you can have hot pockets or you know, the timing, as in life, is everything. But it's not as quick as you may expect if that market was on fire right now, right?
Yeah.
So we'll see what happens. But I got it at the same exact price as I rented out the other unit, which was, I think, almost approaching a year ago. And this is a better unit, and it hasn't rented yet. And it's been up there for 3 weeks, 4 weeks, something like that, approaching. So, you know, I'm not sure where we go, man. Rates are a hard deal. All I'll say is that you want to look at the cash flow of things. And you know, people who are making decisions on that housing market, you got to make sure you can pay for it on this type of an interest rate. Because as you said, my dad said, I mean, even the Fed, they're raising the benchmark rate yesterday, man. And I'm not sure if you heard when I was doing the program yesterday afternoon, but when they raised that benchmark rate to 2.6 on a longer term basis versus 2.5, that just may be the first inclination of going up in terms of a new kind of longer for higher policy. So if we're going to have longer for higher, I think so.
Okay.
I mean, if you're going to raise the benchmark rate on a longer term basis and you're the Fed, you're not going to go from 2.5 to 3, right? You'd freak the market out overnight. You'd start at 2.6 at least. You'd go where we go from there. But they're worried, man. They're worried that we're going to be at a higher interest rate for longer. That's going to put some weight on what you can afford in terms of, you know, you're only worth what your signature is to a certain degree. Everyone's taking on debt. There's a lot of cash buyers in the market, but yeah, there are some influences that are making it tough in that environment right now. Listen, the other side of that, being in Florida, man, being in Lakeland, I mean, Polk County, I'm not sure if you saw Polk County in particular, man, more people moved to Polk County than any other county in the entire country from within the U.S. last year. So we have a unique spot in terms of where we are. I think we'll be fine.
Look, I came down. I kid Tom. I think I was 2 toll booths behind him when he came down 25 years ago. That's when I came down. You could go from the north side of Lakeland to the south side, which is approximately 10 miles, not see 2 cars. You can't even move in Lakeland now. The people have really descended on Lakeland. Look, the 08 debacle in housing was a once-in-a-lifetime chance. And that happened in 08. I didn't even close till November of 2012, and I still got half price. And that's how the lag, when something that bad happens in the housing market, the lag is 4 or 5 years.
Yes, it can take some time, man. And that's why I say even 2014, Jose, it was an extraordinary deal in terms of where the prices are right now, man. I have a beautiful duplex in South Tampa. My 2 neighbors are multi-million-dollar properties, and meanwhile, I think I get into that property at like $215,000, something bonkers that just makes no sense in today's environment. I mean, you know, you'd blow millennials' mind if you ever told them, right, where prices were 10, 12 years ago, something like that. The world has changed dramatically. Like you said, lifetime opportunity, man, but we're not going back to those prices right now anytime soon. And yes, there's going to be some weight on the housing sector. You know, I look at it from the cash flow perspective, which is, I think, where you want to stay, because I think that's going to catch up, as in, you know, we haven't quite played that game just yet, but I think there's going to be some weight, you know, in terms of resistance, because rates are higher, man, and they're going to stay higher for longer. So the days of 3.75% even, let alone people who locked in like a 3%, something like that, under a 4% mortgage, I don't know if we're going to see that anytime soon, man. You know, maybe if we're lucky, we get back down to 5%, that would really, you know, put some oomph into the market. But even the Fed right now, so what's interesting, right, is they're looking for a long-term benchmark rate of 2.6. Let's just say that shifts up to 2.7, 2.8, something like that. Well, if you have a long-term Fed rate approaching 3%, that means you're going to be lucky if you get 30 years at 5%. And that's, you know, even a little lofty. It'll be great for the market, but that's longer term, man. That's longer term, right? They just upgraded the end of 2025. Now they're looking for maybe 3.9% versus 3.6. So let's just call it at the end of next year, the Fed might be around 4%. Geez, mortgages are probably going to be at least 6.5. So we're where we are right now. And that's going to provide some resistance for those, you know, real estate prices. The other side of that, though, man, they're not making more land. They're especially not making more land in Florida. And like you said, I mean, where I was originally, they had, I think I talked about it in the years past. I'm sure you might have heard me. I think they had one development going up. I think and it's still going, 1,800 houses, something like that in there. You had a couple different builders in there. One builder couldn't do it. It was so many houses, and they just keep pushing them out, man. And that's where everyone's coming from. So, yeah.
Wow.
Yeah.
So I'm just to finish up, I'm a little nervous about this tug of war that's going to come with the inventory of single-family homes hitting the market, going from no inventory to a lot of homes coming on the market, and how that's going to tug a war with lower rates, 5.5% or 6%.
Yeah, we got a lot of people that need houses, though, man.
See how it shakes out, as he says.
We got a lot of people that need houses. Remember that one, too, though. We do, So that's going to be something that's going to be buyers in there as well. So we'll see. Jose, man, thanks so much for the call. I appreciate it. Have a great day.
You ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P's up 26 points, 53.12. That's about 0.5%. Look at the NASDAQ 100, man, up by 1.1%, 203 points in the positive, 18,683. How about the Dow above 40,000? A little bit of a pullback near the open, still 40,020 on the futures right now. Absolutely remarkable, man, this market. And we got the Russell up by 13. Great call from Jose. Always appreciate it. Folks, if you want to call into the program, 877-927-6648. And yeah, when you look at this market, the beginning of our conversation with Jose talking about, even if you jump to the NASDAQ 100, maybe a 10% pullback. Folks, if you're in this market for the longer term, you better be willing to take some heat, okay? Because even a 382, as I mentioned, is a 10% pullback, and we could get that in a couple weeks, man, the way this thing has just accelerated to stratospheric levels. You're talking about a run. What are we up now? We're up 4,500 points off 14,000. What is that? 4,500 by 14,100 even. 32%. NASDAQ 100, not even the Magnificent Six. We'll kick Tesla out of there. The NASDAQ 100 is up 32% from the October lows, folks. So yes, you better be willing to take a little bit of a pullback, man. 10% is nothing in this market when you're talking about a 32% acceleration, and it has been a one-way trip to higher prices with no pause. I mean, yeah, you got a few bars, right? These are daily bars, folks. I mean, what have we gotten? For the biggest pullback we had was towards the end of 2023 when you had 5 red bars. Besides that, we get 2 or 3 red bars, but it's been higher highs, higher lows consistently as we continue to rise to higher prices. We check in on the dollar as we've had some extreme volatility recently on the dollar. And we'll go back to a 15-minute, 5-minute, reclaiming some of the pullback we had yesterday. 103.70 right now on the dollar. We check in on gold. Gold up by about $40, 22.01 in the price of the gold contract. We check in on crude this morning, hanging tough above $81 at 81.05. And let's check in on some of the equities. Darden Restaurants, watch out. On the downside, Darden off 4.6% on Darden. They post the first same-store sales decline since the pandemic. That's not what you want to hear. We still got inflation. They should not be having same-store sales declining when you think about that. This morning, they report mixed quarterly results as Olive Garden's owners' same-store sales shrank for the first time since the pandemic. They're down about 5%. They come in with $262 adjusted earnings, pretty much in line. Revenue misses slightly. Now, net sales rise 6.8%, but that is fueled, by the acquisition of Ruth's Chris Steakhouse. And 53 other new restaurant locations, okay? Overall, same-store sales falling 1% in the quarter, as almost all of its restaurant segments reported same-store sales declines. Did you hear that? Only Longhorn Steakhouse saw same-store sales growth. A year earlier, Darden reported same-store sales growth of 12%. I'm rounding up. But you go from same-store sales growing 12% to declining. Yeah, that is a shift of a monumental nature, folks. And what I will say, it's interesting, right? We're out here in Lakeland, okay? Florida, sometimes they joke it's strip mall heaven. Okay, we got a lot of malls out here. One of the malls in particular, they got a few great restaurants out there. They got Olive Garden. They got Longhorn. What's the other one I like? I'll think about it. And so I visit those occasionally. Longhorn, pretty good spot, but I tell you, man, anecdotal again, but they have missed the mark many times. I was enjoying Longhorn a few occasions. Went into there about 3 months ago. Got the stuffed mushroom appetizer, okay? It comes out as basically just mushrooms with a heap of cheese on top of it. I said to the waitress, I feel like this is, I hate to be complaining, but I feel like this just isn't, what it used to be. Bottom line is the manager comes over, says, listen, I'm so sorry. We got a new chef in the kitchen. They don't know what they're doing. I don't know what this is. I apologize. They remade it. They bring it out. And I found myself saying, hold on a second. You're telling me like the literal like head chef in the kitchen doesn't even know how to make the products that they're making? Now, there's a lot that goes into that, whether you're talking about jobs, wages, I don't know. But it kind of blew my mind that even the manager was the one was like, geez, I don't know how they're pushing this out. I don't know if the chef doesn't even know how to make the meals that are on our menu. Nonetheless, it found myself going somewhere else. My birthday was yesterday. I would have maybe went to Longhorn. Where did I go? I went to Cheesecake Factory. Had a good time at Cheesecake Factory. Nonetheless, Longhorn, the only one, rising 2.3%, but still falling short. They were looking for 3.1. So be wary of Darden, folks, when you see a shift like that. You're down 5.5% to kick off the trading session. But, boy, things might be a little bit dire when you look at the run this thing has had, okay? You just traded from what? 133 up to 176 with this market. If you back up, okay, I'm going to back up to where they were a year ago. Remember, I just mentioned a year ago, sales were rising, same-store sales almost 12% on Darden. So what do? You back it up to March of last year. This equity was trading at about 155, catch a little bit up to 170, you pull back. No, they're not. They're now declining, okay? And they are declining, remember, when we still have inflation prices rising. Now, this is not net profits, okay? This is just straight sales. So, yes, they have higher input prices. They have higher cost of goods. Can't deny that. But even with inflationary tendencies there, they are stuck in a declining basis from a year ago. Not what you want to see when prices are rising across the board over the previous 12 months. And nonetheless, maybe people are tightening the pocketbook a little bit. There's a lot that goes into it. Maybe people are having experiences like myself. Maybe they aren't keeping up with where they should be. The other funny thing is, so we have a unique experience at Longhorn, right? So what do? We go to Olive Garden one time after that. We go to Olive Garden. They got a good crowd in there. We make it in there. I think I wanted to get a glass of Pinot Grigio, white wine, going to go with my chicken. And they're out of like Pinot Grigio or something like that. I rolled my eyes. You go into an Italian restaurant and they're out of Pinot Grigio. How does that happen, right? Olive Garden. Nonetheless, a little bit of a rant. Olive Garden, be careful, folks. You got declining sales on a same-store basis. It's always remarkable, same-store sales, how well public companies do on a same-store sales basis. And when you see it go from 12% increase to a decline, yeah, be careful on this equity, man. They'll be around. They got plenty of good businesses, but you don't want to see that. And if you've never visited a Seasons 52, folks, check out Seasons 52, an outstanding restaurant. I remember the first time I went to a Seasons 52, I think 15 years ago. There was one in Orlando originally, and now they have one at Tampa. I think it's in West Shore International. And it's a high-end, nice restaurant, but what they do is all the meals are pretty healthy. And so it's a cool way to kind of enjoy a healthy meal as you're enjoying it in a fine dining establishment. I remember I went in there the first time. I said, this is a unique concept that is going to flourish. I said, who owns these businesses? Can you franchise these businesses? I looked it up. I said, Darden owns them. I guess I'm not going to be starting Seasons 52s everywhere. But nonetheless, Darden down 5.5%, and watch out below on that equity, man, when you got declining sales on the same-store basis. All right, let's check around to some of the FANG stocks. The Magnificent Seven. NVIDIA shares up another 1.3% this morning. We jump over to the big dog. Microsoft up by 1.1%. You got the NASDAQ 100 up by 1.1% already this morning. Apple shares, they declined, down about 0.7%. Meta shares up 1.1%, in key with the NASDAQ 100. We jump over to Google, up about 0.5%. Check out that leap, right? Google on the heels of their deal, potentially with Apple. And we jump over to Tesla shares, up 1% as well. All right, stay tuned, folks. We got a lot to talk about. We're going to come back right after the break. We'll talk about some equities. We'll talk about the dollar, and we'll take a look at gold again. Stay tuned.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets just keep going higher, man. We got S&Ps now up 32 points. Futures trading at 53.19. Now, I'm going to revisit. I was talking about these A to B, C to D formations, right? Absolutely remarkable when you look at the fact that we have now completed an A to B, C to D, and we're even above that price level. You could even cherry pick the bottom in terms of where you are. The lows at the end of October 2022, about 3,500. You trade up 1,100 points to the pullback we got beginning in July of 2023. We make a low of 41.22 on October, what was that, 27th, something like that. It's a weekly chart. And just like that, you get another 1,100 point run. So yes, folks, prepare yourselves for a little bit of a pullback at some point, okay? Doesn't mean it has to happen, but you better be positioned for it and be willing to take it if you are in this market for the long haul. Now, what's interesting is the NASDAQ 100, I got things everywhere. Let's pull off a couple of these for a little bit of clarity. NASDAQ 100, if you're taking that A to B, C to D formation, 19,400 would be the number. And we just keep approaching that price level, man. All you got to do is one more week like we're in right now, man. This week, we're up by 600 plus points. You get another week like this, and we're at 19,400 and change, man, which is just remarkable that you got A to B, C to Ds all over the place. Dow, a little bit of a different animal in terms of the acceleration they have had, but nonetheless, look at this run, man. You're talking about even the Dow goes from 32,400. What are we at? About 7,600 points in the Dow off of an index that was trading at 3,200. The Dow is supposed to be the one that's not, you know, stratospheric like the NASDAQ 100. And meanwhile, we're talking about 7,600 divided by, what did I just say we're at? About 32,400? Yeah, 32,400 was the low. Dow's up 24% almost, folks, from where you were on the October lows. So yes, be prepared for a little bit of volatility. Markets do not go up 30% over a period of 5 months over and over and over, especially after, okay? You can always kind of tweak numbers if you cherry pick lows and highs. I'm not cherry picking the low of 3,500, folks. I'm taking the pullback we got in October. And yes, that's, you know, I'm cherry picking that low, okay? But boy, you start talking about where we are from 3,502, that would be cherry picking the low, okay? And 3,502, what are we up? 1,816 points right now, divided by 3,502. You're up 52% from where this index was trading at, what, a year and a half ago? 52% from where that is. Absolutely remarkable. Okay, we jump around to what else we got going on in this market. So, you got the Bank of England holding rates but offers a dovish signal on cuts is the headline there. And then we jump over to Switzerland, becomes the first major economy to cut interest rates in a surprise move. All right, we jump over to those two currencies. We'll jump over the euro first. Euro, US dollar. We'll put it on a 5-minute to see the volatility this morning. There's some volatility for you. You get Fed volatility yesterday, okay, and then you get their bank this morning. We're trading right now at about 109 in the euro US dollar, and then you jump over to the dollar Swiss, and there's some volatility as they cut, man. Look at that, right? You go from 88.4 to about 90. That is a big move, man. You put this thing on a daily basis just to see the rise we got on a daily basis right now as you got the U.S. dollar Swiss. Now, it's so interesting. I remember talking to our man Teddy Kegstad years back when this thing was at parity. Yeah, and that's not even – we got to put this thing on a monthly. Yeah, that was the period of time, man. Look how long it was at parity. 2014 to 2019. And we'll see. Maybe that's where we're going back to. Quite a little pop this year as you're going from 83 to 90, and we'll see where we settle from there as these markets just do not go down right now. We check out the dollar yen. You put that on a 15-minute. We see the rise yesterday to 151.83. You see the volatility on the Fed brings you down to 150.25, and just like that, you got the dollar yen back to 151.20. And we have been talking about, I mean, think about what could happen if we ever actually get some real weakness in that dollar index. If you get some real yen strength, we got yen weakness everywhere, even on the heels of the first hike since 2007. And yeah, you talk about a pullback to 22. You talk about a resurgent in terms of the yen, sitting almost at 151 right now. Just for some context here, folks, I'm going to put this on a weekly, okay? You ever get a move in the yen down to 140, down to 130, let alone you look at this thing on a historical basis, okay? Look at where the yen has been trading at. Look at where we are right now. If you're looking at the possibility of gold trading higher, keep this one in mind, okay? Now, yes, there is definitely the possibility that the yen trades higher, as in we get, dollar strength, yen weakness, okay? Doesn't have to stop at this price level. They hiked for the first time since 2007, but boy, they were pretty dovish, and they gave the indication that they are going to wait to make sure that they have the accommodative economy to allow them to hike before they go forward any further. But yeah, on a historical basis, it seems like things are lining up for the potential for gold to even trade higher from where we are. And you got gold right now pushing 21.98. Okay, let's talk a little bit of gambling because we're in the markets, and let's talk a little bit of baseball. Boy, have you seen this story? It is a tantalizing one, folks. Where are we? Let me make sure I got it. Yeah, here we go, man. Now, there's many articles you can read, folks. If you haven't been reading up, do some Googling and check this one out because you're going to be hearing about it. First of all, Shohei Ohtani, a generational talent in baseball, to put it lightly. And what's been going on? Well, now he's involved in an absolute gambling saga fiasco. He signs a $700 million deal with the Dodgers. Baseball season is just about to kick off, and you got a big problem, man. So the Dodgers fire his interpreter. You have this one is not deniable, as in they have records that Ohtani, from his bank account, transferred $4.5 million to an illegal bookmaker that's under investigation in California. Sports gambling not legal in California, even though I think it's legal in like 40 states right now. First, his translator comes out and says that he had nothing to do with the gambling. It was my debt. He offered to pay it off. He does an interview on that, and then the very next day, he gets fired, and now the story is that Ohtani knew nothing about it, and you have people in Ohtani's camp coming out and saying that he is the victim of theft. No matter what you hear from this story, remember, and every story that leads with this should lead with the fact that already they're changing their story, okay? And when you have people changing their story, that means there's lies, and that means there's probably a cover-up, and it's such a bummer, man. You got gambling everywhere. That Supreme Court decision was in 2018. We just began 2024, and it seems like gambling is everywhere, and it's a bummer that this is going on. Hopefully it comes out in the best light because, boy, he is a talent like we haven't seen in some time. And it seems like he's got some problems here going on, man, because why are they changing the story? Was he trying to cover for the interpreter? Was the interpreter the one who stole the money from him? Was Ohtani even involved in the gambling? They're saying it didn't involve baseball. As I said, though, take everything you hear with a grain of salt, because once somebody comes out and they're already changing their story, that means that the truth is not quite up there. And boy, it's a bummer when you look at that talent. $4.5 million he transferred from his account to a bookmaker that is under federal investigation in California. That seems to be the only undeniable fact right now, along with the fact that he's probably the best baseball player that we've seen in a generation. So, man, gambling everywhere. And I mentioned that as we got the NCAA tournament kicking off, folks. Quite a day for college basketball. One more segment. S&P's pulling back a bit. We got positive prices across the board right now. S&P is trading at 53.10. Get back, folks. Stay tuned.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the dollar charging higher, 103.77. Earlier this morning, you're at 103.20. As I mentioned, you got some central bank action following ours this morning, of course. You got gold pulling back on some dollar strength. Not surprising there. Still some lofty levels. You're at 21.95. You came into the Fed at 21.60. So you're talking about an acceleration up there. And jumping back to the Fed. So this is the part I keep, stressing here. First of all, you have the long-term benchmark rate going up, 2.6%. Keep your eye on the fact that everybody is talking about the dot plots for this year are still at 3, okay? But as I mentioned, you have 9 officials out of 19, okay, talking about under 3. You got 2 officials at 0 cuts, 2 officials at 1, and 5 at 2. Now, the story's out there. I mean, you got Vanguard, okay, the top U.S. asset manager. No, they're talking about 0 cuts, man. They do not expect the Federal Reserve to cut interest rates this year, defying the view from Fed officials that rates will be reduced 3 times in 2024. And the reason why I stress it is you're going to see this stuff all over the place. Fed officials think there's going to be 3 cuts in 2024. Well, that's kind of the case, except for the fact that you have 9 of 19 officials talking about 3. You got 9 of 19 officials talking about less than 3, and you only have 1 official saying more than 3, right? As probability goes, you got 9 at 3, you got 9 at less than 3. You have 4 Fed members that are either at 0 or 1 cut, okay? So I would say the risk is much far weighted to the fact that we get 2 cuts, 1 cut, 0 cuts. Now, Chairman Powell has continually said that they feel it will be appropriate this year to begin cutting. Boy, watch out if that ever changes in terms of when he has to say the words that we're getting no cuts this year. He's going to try and delay that. It's only March. The market's looking for June right now. But when you hear that continually, that the Fed is pointing to 3 cuts, remember the disagreements in that dot plot. 2 Fed members at 0, 2 Fed members at 1, and 5 sitting at 2. 9 of 19 members under that area, and you already got people talking about Vanguard. 0 cuts. 0 cuts. We were just at 6 or 7. Folks, thanks so much for tuning in. Kickoff Trading Day right here at TFNN. Stay tuned for Basil Chapman. He's coming up with the Tiger Technicians Hour, folks. Have a great day.